You are new to learning accountancy and you are stuck on how to figure out the journal entry for a particular financial transaction, then this is the right video for you. Welcome to our channel Accountancy Bridge Coach, where today we are going to learn further on the journal entries. By looking at the financial transaction, we will pass the journal entries up by applying the golden rules of accounting. If you have not watched my earlier video on how is this golden rules of accounting being framed, then I have given the link and kindly take a look at that video and then watch this particular video. What you can expect from this video is for each of these financial transactions, I would be taking you through the account which is involved, and the second step would be on applying the golden rules of accounting, and then third, automatically we will be able to pass the journal entries. So these are the three step approach which we are going to follow in order to pass the journal entries. Moving on to the first transaction. Owner named Sriram, he started a own business with cash of rupees 1 lakh. So what are the accounts involved? It is the owner contributed funds, right? So it is the owner's capital on one hand, and on the other hand it was the capital was brought in through cash. So what is the nature of the owner's capital? It is personal account. And what is cash account? It is a real account. So now let's move to the step number 2 on applying the golden rules of accounting. So what happened to the owner's capital? Like the capital, that is the owner who is the giver, right? So we need to credit the giver. That is the rule we are applying. How about cash? Cash comes in, right? So what you need to do? Debit what comes in, right? Is this clear? So automatically now we got to know what is the journal entry. So what is the journal entry? We need to debit cash account, debtor to capital account of how much rupees? So you have your debit, you have a credit balance, so it is 1 lakh. I hope this was clear, right? So you could give a narration of being owner contributed capital in form of cash. I hope this is clear. So on a step by step approach, we have passed the journal entries for the first transaction. Now let's move on to the next. Bought goods from Messrs. Vayu and Co. for rupees 2 lakh on credit. That means Vayu and Co. is an organization who has given goods. Okay, so we have purchased goods, the entity. Okay, we are passing the journal entries in the books of the entity, but we have not yet paid the cash. So goods were purchased on credit. That means who is this? Vayu is nothing but a liability for us. So it is a sundry creditor. Okay. So now we have identified two things. So one is goods. What are the two accounts? One is goods or stock, which we call it as purchases account. So when we purchase goods, it is debited to purchases account. And the other party is sundry creditors. So what is sundry creditors? Sundry creditors is a personal account. And how about purchase? Purchase is a nominal account. So what does the rule say? Debit all expenses and losses, credit the giver. So in this case, Vayu, who is a sundry creditor, is a giver of the goods. So Thereby we came on to the journal entry. So what we need to debit purchases account debtor to, you could use sundry creditor account of rupees 2 lakh. So how much goods were purchased? Like goods worth of 2 lakh was purchased. So being credit purchase of goods. I hope this is clear, right? So what is this? What we give it in the bracket, it is nothing but it is called as narration. What is the purpose of narration? It helps in understanding what was the context of the transaction at a later date. On a later date, it gives context. So it can include details like rate at which the goods were purchased, quantity of goods that were purchased, like that. So it can have additional information that cannot be captured in terms of money alone, right? I hope this journal entry was clear. Now let's move on to the third transaction. Purchase goods from Computer Mart for rupees 1,50,000. Let us assume that it is purchased by paying cash. Okay. So what are the two accounts involved? One is computer account. So computer account, which is a fixed asset, right? And the other one is by payment of cash. So it is a cash account. So what is computer account? Computer is a fixed asset. So fixed asset is what? Real account. Okay. And what is the nature of cash? Cash is also a real account. So what does the rule tell? We received fixed asset, right? Um, Debit what comes in. Correct. Fixed asset came in, right? And we paid cash. What goes out? So when it goes out, you need to credit. Automatically we got to the journal entry, right? So what do we debit? We debit computer account debtor to cash account. I hope this was very simple, right? 1,50,000, and we can give narration as being purchase of computer. Let's move on to the next transaction. Now it is a sale transaction. Sale of goods for cash for rupees 40,000. What are the two accounts involved? So one is cash account and other one is sales account. What is cash account? What is the nature of cash account? It is a real account. Correct. And sale is a nominal account. That means what happened to the cash? We received cash. That means comes in. Something came in, right? So what we need to do? We need to debit what comes in. And what is a nominal account? It is a income and gain. So we need to credit all incomes and gain. We got to the journal entry. So we need to debit cash account debtor to sales 40,000. Clear? You could give narration as being cash sales. Next transaction is issued check to Messrs. Vayu for settling his account rupees 1,95,000. So if you remember, or you can go back and watch that particular transaction, the value of the credit purchase was 2 lakh. Okay, but it was settled by check. Settling account means it was paid in full. So what we infer is there is a, because the amount was paid in early, there was a discount that was received. So it is a bit tricky because there are three accounts involved. So one is sundry creditor, other one is bank account because issued check, other one is discount account. Okay, now let us first next let us see, it's it is what discount received. Okay, let's see the nature of each of these accounts. So sundry creditor is what? Personal account. Bank is what? Bank is also personal account. And discount received is what? Nominal account. Clear? Clear? Okay. What happened to sundry creditor? He received. Okay. So what will happen? He is the receiver. So we debit the receiver. So how about bank? We issued check. So bank is the giver in this case. So what we do? Credit the giver. Okay. What is this discount received? So as it said, it is discount received. Correct. So it is an in nature of income. So in nominal account, what does the rule say? We need to credit all incomes and gains. Okay, it was a discount that the sundry creditor provided us, so we need to credit all incomes and gains. So shall we plug these in, put it in the form of a journal entry? Okay, first is sundry creditor account, debtor. So the total credit sundry creditor balance was 2 lakh. Debtor 2. One credit one account that is to be credited is bank account. So bank account, which is we issued a check of, here the question says 1,95,000, and the remaining is nothing but discount. So it is discount received of how much? 5,000. And hence, have it, has this tallied? Yes. When we sum this up, it comes to 2 lakh. So your total of your debit and credit is equal, which is to be ensured and very important, especially in case of multiple accounts being involved in the journal entry. Being settlement of dues to creditors. I hope this was clear, right? See how a multi-level account involved transaction could be worked out very easily. I hope this was clear. Okay, this is the last entry which we are going to see in today's example, which is paid rent of building by check. Half of the building used by proprietor for residential purpose. Total is 50,000. So let us see the components. What are the accounts involved in this particular transaction? So one is paid rent. So there is rent account in the form of check, that means bank account. And there is a third leg of this transaction because it says half of the building used by the proprietor for residential purpose. So uh, this total rent of 50,000 cannot be charged as expense in our profit and loss account. So 50% of it, 25,000 would only pertain to the business, which will be part of the rent account. So the balance 25,000 would go as part of drawings, like how when owner withdraws any amount for personal use, this will also be like a form of a personal use. So it is a drawings account. So the third leg of account that is involved is drawings account. Now let us see. Rent account is a nominal account. What is bank account? Bank account is a personal account. Discount account, I mean drawings account. Drawings account is also personal account. So we got to the second step, that is identifying the nature of the account. Next is to identify the golden rule. Rent is a form of an expense. So because it is an expense, what does the rule say? Debit all expenses losses. We paid. So bank is actually the giver. So what does the personal account rule say? We need to credit the giver. And drawings is a personal account, right? So drawing is nothing but owner is receiving it in the form of drawing, so it is actually in the form of receiver. We need to debit the receiver. How beautifully this multiple account involving journal entry has been solved, right? So we need to debit what? First we need to debit rent account, debtor of rupees 25,000. Then we need to debit again drawings account, debtor, which was another 25,000, to bank account, total of 50,000. Once again, it is ensured that the total of the debits is equal to total of credit, being rent paid for office use, office and personal use. So we saw six examples of transactions where we went through the three steps of: first step identifying the nature of the account, the second step being what is the rule which is involved, and third step being passing the journal entry. So I hope this was a very detailed explanation on how to pass a journal entry in a step by step manner. See you soon in the next video where we will be looking into advanced level of journal entry transactions. If you are someone who is studying in class 11 or you're studying basics of accounting without any background of finance or accounts, then consider subscribing to my channel. Thank you.